What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF, SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Friday, February 9th. SPY here today up just 22 cents a share, 0.04%, essentially what is a flat day here today. Now, SPY is just slightly lagging behind the S&P. If we take a look at the S&P, we just barely got a little bit of a test of 5,000 here today. But of course, SPY holding off that $500 a share region. But let's start here by taking a look a little bit closer at the 1 minute chart. By the way, guys, if you get value out of me making these videos each and every day, please subscribe to the channel. Our goal is 1,000 within the next 2 weeks, and I really think it's doable with your help, of course, so I appreciate you doing so. Let's take a look. So SPY is one that, look, I'm watching very closely every day for intraday opportunity, particularly scalp opportunity. Now, what I liked about this one here, we had this just very clear rejection setup. I actually instead favored to look at and alert the Qs. The Qs in SPY typically will move very closely together, obviously. And today, it just so happened that the Qs were just slightly more favorable, in my opinion. By the way, if you guys want to get those intraday scalp setup alerts, take a look at that first link in the pinned comment. You can choose from just the scalp setup alerts, or you can add on swing trade setup alerts, unusual options activity that's human verified, by the way, or even platinum one-on-one coaching if you're looking for a much more hands-on experience. That price does go up over time, but you can get grandfathered in at the current rate, and I hope to see you inside. But let's now move on here on SPY to the 5 minute and take a look at volume. Okay, again, listen, it was a flat day, but even flat days have volatility. So remember, what we're typically looking for here is going to see as much volume as possible on moves that support potential bias. Okay, looking here immediately at SPY, I'll tell you what, let's just remove this candle for a second. Aside from that, there's not a lot I can pull here in terms of volume spikes and dump offs that support one bias or the other. I think it would be a force here. I like it to be very clear. Now, looking here, this candle is going to be when the S&P tested 5,000. So what I anticipate happened here is you had a lot of volume trying to kind of catch the potential pop on SPY if we saw the S&P rip up through 5,000, and you had a lot of people trying to kind of like front run that break. Now listen, it's entirely possible that the last candle of the day, being that it was the last candle of the day, this could be a little bit of a data error, but it makes a lot of sense to me to see that much volume because, you know, it's not uncommon that whoever is or wherever these platforms are sourcing their data, there's really not that many sources. So when you get a data error, it tends to show. Not only is it very common on like the last candle of the day or the first after hour candle of the day, but it tends to show across multiple platforms. So it looks like it may actually be realistic, whereas in a lot of times it's actually a data error. In this case, I would not be surprised at all if that was not an error, if that was real volume. That makes a lot of sense. But truthfully, you know, I don't know if there's a whole lot of value to be had there other than perhaps people, institutions, algorithms are excited for a potential break of 5,000 on the S&P. I know I am. Let's take a look now at the 30-minute chart. This one's incredibly relevant here as we look toward tomorrow. This white line, that's going to be the 50 period. We're looking at these as the self-fulfilling prophecy technical indicators that they are. Okay, so that being the case, you know, what am I looking at here specifically on the 30-minute chart? Well, from a bullish perspective, listen, I want to see that 50 period hold as well as possible. Okay, ideally retest it, bounce up out of the hole, and get a test of that level that we're really going to be looking at, that $500 share level. Okay, if you're a bear here, looking at this immediately relevant level of the 50 period here on the 30-minute, bears, you're going to want to see that crack to the downside as hard as possible. Again, specific here to the 30-minute. Let's now zoom out and take a look at the 4-hour. Now, that nearest level that I have my eye on is going to be, again, that 50 period. However, if you look here, on the 4-hour being a longer time frame, it's going to take longer to catch up to the stock price. We're looking at about a 1.2% downside move to make a test of that 50 period. Now look, it's not at all out of the question here for the S&P, right, for SPY. However, lately, you know, I like to say anything over a 1% move in the S&P, so SPY, is that's a pretty volatile day. Most days, you're going to see the S&P under 1%. Okay, it's relatively uncommon, though slightly more common as of late, as we've had a little bit more volatility in the markets. But it's relatively uncommon to see over 1% moves in the S&P. Of course, it happens, right? But contextual here, relatively uncommon. But being that it's only a little over 1% away, you know, I'm watching that 50 period here, specific again to the 4 hour. But we're always watching multiple time frames. Okay, now the most important chart of all, the most common chart, I would argue one of the top 5 charts like ever watched in the world for the US market, okay, is going to be the daily on SPY with the 50-day, that white line, and the 200-day moving averages, that gray line. This is such a commonly watched chart, it's ridiculous. For that reason, we have to pay attention to it, because a lot of the market, you know, in my opinion, is going to be the psychology, that self-fulfilling prophecy, okay? Now, the nearest technical indicator, self-fulfilling prophecy technical indicator, is going to be that 50-day. However, it's 4.7% away, if not 4.8% away to the downside. Is that immediately relevant in the context of a video looking toward tomorrow? No, not really. Hopefully not, I'll say. So what are we left looking at here? Well, I'll tell you what. I am looking at 500 a share, okay? Now, that's kind of 5,000 a share on the S&P. Of course, it's not always going to be exact, right? And I think in this context, we, of course, you know, we have to be looking at both. This is an ETF. This isn't a stock that moves sort of close. Like, this is an ETF that represents the S&P, right? So we have to look at both. But in the context just of SPY, let's talk about that, okay? And just understand you'll be looking at 5,000 on the S&P as well. But let's just look at SPY here. Listen, $500 a share, for me, this is the biggest test in years. If not up until this point, okay? But I'll say, just to be safe, the biggest test in years. $500 a share on SPY is huge. If I'm a bull right now, I'm looking at this and saying, listen, I just want to claim 500 as soon as we possibly can, retest it, show that we want to see that as support on high volume, and bounce up out of the hole. And if I'm a bear, it's even easier. Do not give up 5. Fade away from 5 as quickly as possible, ideally on big volume if I'm a bear, right? And just show, again, on as much volume as possible, that we're not ready for a 5,000 S&P. We're not ready for a 500 SPY quite yet. If I'm a bear, that's what I'm looking for. And I think a lot of bears psychologically are going to be looking down here toward that 50-day moving average for a potential back test. Okay, just so we can all be kind of in on the most obvious psychology, I would say, from a bearish perspective. All right, implied volatility here is still sitting relatively low. Understand that a lot of new options buyers, if we were to see this bump up back toward equilibrium, would benefit from IV pump. Okay, so always worth considering that. Let's now look at the bias here in the chain. 6.3 million total contracts traded today. That's a pretty good sample size here on SPY. All right, 3.1 million of those were calls. 3.2, just a little over 3.2 million of those were puts. So the overall ratio actually relatively undecided, with a very, very small bias to the bearish side. But look here, 0 to 20 delta. Short-term speculation, those cheapy, gambly, out of the money, short-dated typically, calls and puts. 854,000 calls, 1.38 million puts. The short-term speculators, on average, are leaning with a little bit of bearish bias here in the very short term. Okay, again, overall, undecided pretty much. Short-term speculators, these option traders are betting on average that we're going to fade in the very short term away from 500. Again, don't shoot the messenger, right? This is data. This is not necessarily opinion-based. But then, of course, as expected here, the 61 to 80 range, 81 to 100 range, that mid to longer term in the money and deep in the money contracts is leaning to the bullish side. But again, this is the S&P. I pretty much expect that most days, that mid and longer term, those speculators and those investors, those bettors are going to be leaning bullish longer term on the S&P. All right. Listen, if you got value out of this video, please leave a like. Helps out tremendously with the algorithm. You have no idea. And I'll see you in the next one.